welfare of the United States economy. The Federal Reserve will never let this happen. It's not an option, ever, period. The way we resolve these liabilities, and resolve them we must, will affect our own well-being as well as the prospects of future generations and the global economy. Failing to face up to our responsibility will produce the mother of all financial storms. The warning signals have been flashing for years, but of course we find it easier to ignore them than to take action. Will we take the painful fiscal steps necessary to prevent the storm by reducing and eventually eliminating our fiscal imbalances? Well, that depends on you. And I mean you literally, the people in this audience. This situation is your creation. When you berate your representatives or your senators or presidents for the mess that we're in, you're really berating yourselves. You elect these people. They serve the will of the people. You're the ones, every single one of you, when you look in the mirror, think about this. You're the ones who let them get away with burdening your children and grandchildren rather than yourselves with the bill of these entitlement programs. And by the way, the issue transcends political affiliation. When George Shultz, who's one of San Francisco's greatest Republican public servants, was director of President Nixon's Office of Management and Budget, he became worried about the amount of money that a Republican president and a Congress was proposing to spend. And after some nights of tossing and turning, he called the legendary Office of Management and Budget staffer, a man named Sam Cohen, into his office. Sam Cohen had an encyclopedic memory of budget matters. He'd been there from the very beginning, and he knew every zig and zag of budget history. Sam, Shultz asked, tell me something, and let's just keep it between you and me. Here we are in the middle of the night in the White House, and I just have a question between the two of us. Is there really any difference between Republicans and Democrats when it comes to spending money? Well, Cohen looked at him and furrowed his brow, thought about it for a while, and then he replied, Mr. Shultz, there's only one difference. Democrats enjoy it more. And yet, no one I know, Democrat or Republican, enjoys placing our children or our grandchildren and their children and grandchildren in harm's way. No one wants to see the frightful storm of unfunded long-term liabilities destroy our economy or threaten the independence and authority of our central bank, the Federal Reserve, or tear our currency asunder. Of late, we've heard many complaints about the weakness of the dollar against the euro and other currencies. It's been argued in the op-ed pages of the Financial Times that one reason for the demise of the British pound was the need to liquidate England's international reserves to pay off the costs of the two world wars. In the end, according to that argument, the pound was sunk by the Kaiser's armies and by Hitler's bombs. Well, right now we, you and I, are launching fiscal bombs against ourselves. You have it in your power as the electors of our fiscal authorities to prevent this destruction. And the reason I came here tonight is to please ask you to do so. Thank you. And now, in customary central bank fashion, I will do my best to avoid answering any questions that you might have.
Thank you, Richard. Our thanks to Richard Fisher, President and CEO of the Federal Reserve Bank of Dallas, for his comments this evening. I am Alex Marin, board member of the Bay Area Council, and I will be conducting the audience question portion of this program. As a reminder, you are listening to the Commonwealth Club of California radio program, and our speaker today is Richard Fisher, President and CEO of the Federal Reserve Bank of Dallas, who is discussing U.S. fiscal and monetary policy. Richard, the first question, I've had a couple of questions here about a desire to better understand the structure and the workings of the Federal Reserve System and compare and contrast the Dallas Federal Reserve to the San Francisco Federal Reserve.
All right. And I think it's important to understand this. The Federal Reserve was created in 1913 under President Wilson. It's an ingenious, I think, federalist device, in that this was created so that we would avoid the monetary debacles that occurred at the turn of the last century, the penultimate century. so that you had a structure which created 7 governors appointed by the President of the United States and confirmed by the United States Senate, as I was when I was an ambassador and a trade negotiator for the United States. And then 12 operating banks that would operate the payment system of the country, who would be elected by their boards of directors and not subject to Senate confirmation or appointment by the President of the United States, who would be independent. Presently, just so you know, we have 5 governors, one of whom announced his resignation today to go back to academia, instead of 7. The Congress has decided not to confirm 2 of the nominees put forward by President Bush. But we have 12 bank presidents. The system, remind you, was created in 1913. In 1913, St. Louis was the gateway to the West. And so the only 2 banks in the western United States are the Federal Reserve Bank of Dallas and the Federal Reserve Bank of San Francisco, which is led by my good friend Janet Yellen. The fact that things have changed and between us we have a significant portion of GDP doesn't change the apportionment of banks. I doubt any senator would want to give up a Federal Reserve Bank in their state or any congressman in their district. I have the Federal Reserve Bank of Dallas as my responsibility. Janet Yellen, as I mentioned earlier, has the Federal Reserve Bank of San Francisco. We operate banks. We lend money at the discount window. We process cash. We clear checks. And we operate as a contractor to provide certain payment devices for the United States Treasury. In the case of the Dallas Fed, I come from a state, Texas, where the use of cash is actually growing, unlike in the rest of the United States. And last year we processed through the 5-story vaults that are underneath my office $121 billion in cash coming in and going out. There are 4 check processing centers for paper checks, which are disappearing, by the way. My children have never written a paper check. It's a declining industry, and those 4 are Dallas and the Cleveland Fed and the Philadelphia Fed and the Atlanta Fed. So we operate the payment system of the country. The biggest trading center for the Federal Reserve and the premier inter pares is the New York Federal Reserve Bank. They operate the system open market account to intervene in the system on behalf of all of us. And then all 17 in normal time, 19 in normal times, but presently 17, about to be 16, compose what's called the Federal Open Market Committee, where the base interest rate is set, Alex. And that is done by a process of deliberation. It's unique, I think, in the American government. I've served in 2 administrations. I've never seen anything so civil. And by the way, I took leave of my senses in 1994 and ran for the United States Senate and unfortunately got the nomination. So I've been through that process. I lost, obviously. I ran with Ann Richards against George Bush and a fine Republican senator. So I've seen all 3 sides, the legislative, as I call it, the lower intestine, the executive branch, and the central bank. And our deliberations are quite civil. And just to complete the answer, at the beginning of each meeting, the chairman calls the meeting to order. The 12 bank presidents are asked first round, what is their opinion of how the economy is proceeding? Each of us gives our views. There's no time limit. We've all learned to be concise in what we say. We're well briefed by our own economists. I have 30 economists at Dallas Fed. Janet, she's so bright she doesn't need any, but she also has an enormous group of economists that advise her. She's a wonderful woman, by the way, a first-rate brain. We go around the table, and then the governors are asked their opinion. The next round is, what are we going to do about it? Do we raise rates? Do we hold them flat? Do we lower them? And if so, by how much, and what's your argument? And then the third round consists of a vote and then a discussion of how we're going to word our statement. We start at 8:30 or 9 o'clock in the morning, and we release a public statement by 2:15 on the dot. I defy you to find any place in government that operates that efficiently. And we do it in a civil manner. You're addressed by title, Mr. President, Madam President. We all stick out our chest at that title. It's a great title. You respond, Mr. Chairman or Governor. And it is a civil deliberation. The people in this room know that I have dissented on the last 3 votes. I've been against the interest rate cuts. But at the end of the meeting, everybody is friends.